Good evening, everybody, and welcome to this edition of Live Market Analysis. It is the 11th of March. It's Monday night. It's a public holiday if you're in Victoria, and it's a pleasure to join you and talk about markets one more time. Before we get into the good stuff, it's not like it's bad stuff, it's just stuff we have to talk about. And that's the disclaimer. It says that the content of this presentation is general in nature. It has not taken into account your personal financial circumstances, needs or objectives. It does not constitute a recommendation of any sort. And before you act upon this very general information, you should consider it carefully or seek the help of a financial professional. It's also important to remember that markets go up and down. We saw that today. We saw it on Friday in the US, and it's very frustrating when that occurs because we'll probably lose money. Trading and investing is risky. You'll endure losses inevitably, but ultimately it is you and not I who's responsible for any of that. It's over to you. Get the requests rolling. We can talk about anything to do with trading. It could be your methodology, it could be your money management, it could be your mindset, or what we usually do is talk about the stocks, bonds, commodities, indices, and crypto that you're probably trading. Let us head first to I'm going to go here first and have a look at, not supposed to look at my Twitter, but that was the post there from Nighthawk, one of those memes. I wanted to look at Ethereum and Bitcoin, and the reason why I was just on Twitter is I did post one of my cryptic what's wrong with this chart posts about Bitcoin, and we should mention Ethereum. There's really nothing wrong with the chart of Bitcoin or Ethereum, as we can see. Hey, that's a live candle at the end. It won't end until about 8 a.m. Perth time tomorrow morning, so plenty can happen. But from what we can see here, it does appear to be a picture of excess demand. So if you're wondering what you're supposed to respond with to those tweets, you don't have to respond with anything. I know there's nothing wrong with the charts. That's why I'm posting them. To be fair, each time I've done that over the next few days, the price has gone up $10,000 US. Whether that's going to happen this time, I don't know, because I don't know the future, but I posted again, what's wrong with the chart? I can't see anything wrong with that chart. I haven't sold any yet. I will 100% let you know when I sell my first third, but as you can see, I haven't been given a reason to do that up to this point. Let us head over to I'll stay here actually because I did get a request from Craig for West Texas crude oil, and given I'm here and that's where I'm going to get it from, I might as well hang around. It's not really going anywhere very fast at all, is it, Craig? Look, there's a slight uptrend. You can see the light green zone. That's our short-term trend ribbon. That's our 21 and 34 EMAs. If you want to think about what they are and how they work, you don't have to. You can send me your TradingView username, which I don't think is hard to get. Just go onto your profile up here, click on that button, and I'm sure it's there somewhere. I won't waste all of our time finding it, but that's where you'll find yours. Send it to me, and I'll give you access to my trend ribbons. And basically, all you need to know is double green is good for going long, double pink is good for going short, and in between is obviously in between. And that's pretty much what we've got here. The long-term trend is largely indeterminate. It's very flat, and under the light green ribbon, I think it might be orange, but don't quote me on that. I'm a little bit colourblind. Either way, it's not setting the world on fire, and neither is West Texas crude oil. In fact, we've moved back into a pattern here of lower peaks and lower troughs. So once we've got that first layer of our trend ribbons, we're then delving into the price action, and that's your peaks and troughs that I've taught you many times how to do those, and I'll probably teach you again tonight if you're new. And the final flourish is the candles, and obviously for longs we're looking at white candles and lower pointing shadows to indicate demand in the system, to indicate program buying, to indicate buy the dip and accumulation. And when we have the black candles or the upward pointing shadows, which is pretty much what we've got in the last, let's call it 5 to 10 candles, we've got excess supply, we've got distribution is another way to put it. We've got selling into the rally. This is very flat. I wouldn't want to call it up or down one way or the other because the technicals just don't allow me to do so. More than likely to probably continue to go sideways. There are some key levels, of course. I think if we start trading beneath, this area around here, let's call it 75, put a round number on it. then it's more likely to continue to sell off than it is to go back up. But if it can trade above about 81, then it can probably move up to some higher retracement levels. That's about as comprehensive as I can get on crude oil. While we're here, let's do a little bit of a whip around the grounds. And I did did a chart watch today. So if you haven't you've caught up yet, I've been working at live wire markets and market index for about the last 5 odd months. And I do publish articles on a daily basis to head to those websites if you want to catch my content. I did a chart watch today on uranium and the top 10 uranium stocks, and we do have some issues today, and if you type them into your list, we'll look at those later on. Otherwise, head to the article. It's all in there. What I'm not able to do because of the licensing restrictions of market index is to make a clear call like I do here. I'm allowed to do it here because I'm not running a business. Market index runs a business, and therefore they have to be very careful, and I can't give you that definitive answer. So if you're wondering why Carl keeps talking about demand side's in control, supply side's in control, there's excess demand, excess supply, it's because Carl can't make a specific call in those articles. However, when you think about it, do I really need to say any more than the demand side's in control or the supply side's in control? We know what Carl's trying to say in there, if maybe the unwashed masses don't. The uranium chart, obviously we are experiencing a price action change here. I did warn you about it whenever back, that everything was fine until we see lower peaks and lower troughs. That's always the case when we don't have candles. We can only go on the price action. And it was the price action that turned to this short-term trend first, well before the trend ribbons turned. And that's because price action is commensurate with what's happening in trend ribbons by their very nature, because they're based upon moving averages, even though I use exponential moving averages, are a lagging and a significantly lagging indicator. So we don't want to be ignorant to the price action. In fact, I always place price action first. As you know, lower peaks and lower troughs mean lower peaks, increasing supply. What else could possibly cause lower peaks on the chart? Well, it could be a combination of things. It could be increasing supply, but it could be just the same supply and decreasing demand, and that supply gets a bit more motivated because they can see the demand backing away and they're forced to accept lower and lower prices to offload that supply. So supply didn't increase at all, just demand backed away, and then supply became motivated to seek out those lower prices. That's not a good sign though, is it? And that's what we need to interpret when we see these lower peaks. And then we started to see the lower troughs as well. Now, what could cause lower troughs? Why is Carl always banging on about higher peaks and higher troughs and lower peaks and lower troughs? You've got to think about what's happening when these patterns occur. The lower troughs, of course, is potentially diminishing demand. The demand is pulling away to lower prices, and that supply is motivated enough to go and seek them out again. Again, demand pulling back, potentially supply becoming more motivated. It's not a good sign. So that's where we were. We changed the trend. Where are we now? We're still, the long-term uptrend is the next place to look at. It's still green. It's still largely expanding as far as I can tell with the naked eye, and we're still closing above it. So that's okay. But we are now, in that phase where we're largely neutral in the short term, and you can sort of bring that thinking back to some of your stock positions potentially, but still with a longer term bullish bias. Let us have a look at iron ore now, which I also covered today. That doesn't look good, of course, from there, but we do have candles on this one, and that gives us that extra piece of information, the extra colour, isn't it? Really, the more colour into the, not just literally, but figuratively speaking as well. Black, supply. Black is all about supply. Upper shadows are all about supply. And if you'd never met me, you would have looked at this chart and you would have gone, ho hum. Now that you know me, you look at this chart and you go, holy moly, everything this guy says is true, and it bloody works out, because we've seen how predominantly white candles, predominantly lower shadows, light green zone, gives way to predominantly black candles, predominantly closing below last troughs, for example, setting lower peaks, making lower troughs again, more black candles, and the trends changing, and the light green zone going from dynamic support to dynamic resistance. Very clear here with the big black candlestick pattern here, follow throughs. I mean, it is just textbook stuff. And the most textbook thing about the chart we're seeing, and this is the takeaway point I want you to have on this chart, is the fact we pushed in and we pushed up. I should say we broke the long-term trend ribbon, didn't we? We broke that long-term trend ribbon. It went from offering dynamic support here to dynamic resistance over here, okay? Let me go. Support, you can see the little mouse there. So let's call that support to dynamic resistance. And when that happens, you can really see how the price can accelerate to the downside when that occurs. And that's iron ore. They're not looking too good. Let's head over to Dr. Copper, which looks fine, doesn't it? No, I don't have anything horrifically bad to say about Dr. Copper. I don't have anything good to say about it either. It's very sideways, isn't it? The trends, the price action, and the candles. Hey, the candles aren't too bad. There's a few white ones in there as well. Where can we go? Gold. I know gold's been getting a few headlines. You know, I don't talk much about gold. I didn't do a chart watch on gold because I think gold's really bloody boring. But it did manage to tickle a new high, didn't it? To be fair, nothing really wrong with that chart either. If you are a gold bug, you know I'm not a gold bug, but if you are a gold bug, then there's nothing in here that is sinister for your ASX gold holdings. Having said that, your ASX gold holdings probably won't go up anyway. If you think gold is going up, ladies and gentlemen, just buy gold. Too many things can go wrong with your Aussie stocks. And a few people out there are nodding their heads going, yes, Carl, I believe you. I know that from first-hand experience. Let's leave natural gas alone, because every time I say this will go up, it goes down, so let's leave them alone. What else can we look at here? Brent crude is probably going to be just like West Texas. Coal, thermal coal is starting to go back up. I saw this a few days ago. This little rally here and this little pullback is okay, because if we start to make another higher peak through here, then we've got a little bit of an uptrend here in thermal coal. Okay, for whatever that's worth to you. Coking coal has broken down, heading the other way, and there's no reason why they should really move in the same direction either. We won't do any of the agriculturals unless you really, really, really want to. While we're here, let us have a look at the bond market. There's not a lot going on here, actually. I was going to say a general trend lower. I haven't looked at this one since probably the last time we looked at it. There's actually a little bit of a trend higher there, but the reason why I was saying there's a general trend lower is because there's a bit of a general trend lower in certainly the US 10s. We've got a big bond auction coming up this week, which could roil bond markets. And that is, if there's not enough demand out there for these bonds, if there's lots of demand, bond yields will come down, and that'll be good for stocks. It might come at a very valuable time for stocks. And again, 30s heading down there, nothing to worry about. I know the Japanese 10s were heading up, but that's okay. Not great, but not the end of the world, because the other one's heading down, and Aussie 10s are heading down as well. And I haven't looked at 2s for a while, but they look like they're about to break down. So nothing too sinister in there for stocks. And I don't know, is it fair to say that many of the big corrections we've had in stocks have been directly related to spikes in these bond yields, and yet this time we're having this pullback. It's got nothing to do with bond yields. So something else is at play this time. That's very interesting. And we'll keep going. We'll see if we can find what it is. We've been following this story here about the Chinese stock market. We've talked about its reversal, and I said to you, go check the last video or two. Whenever I talked about it, I said, look, this one's probably got some legs because of the magnitude. The intensity of these white candles equals the magnitude and the intensity of the excess demand in the system. That is, sellers have backed away. Sellers are no longer falling over themselves to get out or to short sell. Many of those shorts are probably thinking, I actually want to be out of my shorts, and that's contributing to demand as well. We're seeing the long-term trend ribbon initially try to resist the price, or the prices advance, which is what it's supposed to do, and it's actually starting to give way. So it's starting to lose that battle as being a dynamic supply barrier, and we're actually seeing some nice candles through it today, and some nice candles today, even though I'm going to say probably the rest of the equity world was heading down. So that's pretty impressive there. What ramifications does that have for the local market? You'd like to think resources stocks will be going up, but they're getting belted at the moment. But maybe the bigger picture is they will. And this is the Chinese A50 shares. These are shares that Chinese people can buy, and typically they've been very shy up to this point, but that actually looks half decent. We'd almost call that a turnaround play, wouldn't we? So I think something different is happening in China. Let's check the real estate indices. Are they turning around? No, they're not. Nothing different is happening here yet. That's interesting in itself, and that's a little bit disturbing. maybe not really underwriting this theme of Chinese stocks are finally turning around. And if Chinese stocks are turning around, the Chinese economy is going to do better as well. It's all linked together, isn't it? It's a circular logic mechanism there. The Hang Seng not looking as bad either. The Nikkei, of course, we know was going from strength to strength. It's had a bit of a pullback over the last few trading sessions. Decent candles there. If I was long the Nikkei, I wouldn't be carrying a full risk position on that. I'd knock a third off, take a little bit of profit off the table, but still on the basis of those amazing trends, be holding 2/3 of my position. Let's head over to Europe, where we were a bit circumspect last week, weren't we? But they've had some decent candles, not having a Friday fall like they did in the US, but don't forget US markets close after European markets, so maybe they've got some catch up today, but they might be catching up as we speak. We can see there the DAX is actually popping down a little bit off its highs from Friday, and I expect this to be doing the same. It's actually not really doing much, but maybe it hasn't fully opened yet. And then the FTSE 100, we said last week, was looking very flat. I'm going to head back to my Amy broker here, so I've got my scratchings for my Nasdaq chart. That is Dicker Data. We'll do that one a little bit later on. Oh, I can't remember who asked me. I think it was James that asked me that question. Let me say for sure. It was Max. It wasn't James at all. Let me head over to the Nasdaq chart. And actually, we're going to go here. And we're going to go here. And we're going to go here. So we know what it is. I don't like Friday's candle at all, so I'm putting us all on alert. We are going to be alert. We're not going to be alarmed or panicking, but I don't like that candle at all. It's disturbing. When we've seen these types of candles in the past, not a lot of volume with it, so that's given me some comfort. But if we look here, was there a lot of volume on that one? No, there wasn't either. Was there a lot of volume on that one? No, there wasn't really. You look at some of these other nasty ones, there wasn't a great deal of volume. I was going to say, let's hope it's something like that, but even then, eventually it did give away to some excess supply. I think we've got some issues here. Just be careful. What does be careful mean? Carl said be careful, and I've got about 100 long positions in the US because, last week we looked at the charts, they were all amazing. Well, of course they're all amazing because, everything was going gangbusters, but we can't tell the future. We don't know when that supply is going to come out. It means potentially maybe we don't add any more risk. I mean, I know we're going to see a bunch of great trading ideas today from you all. By the way, Perry sends his regards. He's on holidays. He's cruising somewhere, so he won't be here for 2 weeks. So maybe we won't see as many. But maybe we don't add any risk today. Maybe we're far more ruthless on those black candles, upper shadows, the supply signals, where we might have otherwise let them go because everything's kind of hunky-dory, but we might be just really ruthless and just trying to pare back that risk to maybe aim for a portfolio risk reduction of around 1/3. Sort of target that over the next 1 to 2 trading sessions just as a precautionary measure. Hey, if it goes back up, we've still got 2/3. We'll be a little bit annoyed, but still quite happy. And if something really bad does happen from here, well, at least we took some off the table. Okay, so I think that's where we're going on the back of that last candle. Why is it so bad? If you're not sure, it's the engulfingness of it. I know that's not a word, but I've just made that word up, the engulfingness of it, the blackness of it, and the fact it closed very close to the low of the trading session. And to be fair, it's got a few buddies. There are a few supply-side buddies around the place more recently as well. And I think that trend is probably flattening out also. Let me just do the quick whip around the grounds because I know that this one still looks pretty good, but also Friday's candle wasn't great. Yes, it wasn't down anywhere near as much as the Nasdaq or the S&P 500, but we've still got that showing of supply, the big fingerprint of supply coming in there, and the S&P, I don't want the total return, I want the equal weight. Anyway, okay, let's head back over here. Just SPXEW. I think we found it last week, didn't we? Indices over here. SPXEW. There we go. It's worth checking. That's probably the least concerning out of the lot of them, isn't it? Okay, but remember, S&P 500, these are big blue chip stocks, and what we've done is we've democratized them, so we're giving less weighting to the big ones, which some of those big ones are starting to pull back also. That's actually not concerning at all. I mean, on that basis alone, I wouldn't say you need to manage your risk, but I'm going to stick with my earlier call of saying we do. based upon the importance that I place on the Nasdaq and also the Russell 2000. The only thing we haven't really talked about here is the ASX 200, where we do have our own massive black candle, not quite engulfing, but still very, very nasty indeed. And it is feeling a bit like a species-ending event, at least for this phase. Whatever this phase was from December, well, really it's from November, isn't it, to March, and maybe we've got a little bit of sideways movement. April is typically a really good month of the year. So here we are, mate. There's still there's still 3 weeks, really, isn't it, until we got there. So if we chopped around, maybe even had a sell-off or two punctuating the next 3 weeks, I wouldn't be surprised based upon that candle. But I don't know the future. I can't tell. All I can see is a bunch of people got out today, and there really wasn't a lot of demand in the way. And maybe that's the saving grace, isn't it? You can see that. How do we know a bunch of... Well, it's not fair to say a bunch of people got out. A bunch of people were really motivated to accept lower prices. Think about that. Let me say it again. A bunch of people were really motivated to accept lower prices. Okay? You can see that. That's the black candle. Motivation to accept lower prices. Was there a great deal of demand getting in the way? There was hardly any demand. So we had this huge spike in motivation to accept lower prices and an almost vacuum of people looking to absorb that supply to get in the way. How do I know? How do I know there were so few people that wanted to take on that risk today? Well, look at the volume. Hardly any volume. So that supply is selling into a vacuum. Let's see how we go tomorrow, but that's the first shot across the bow. Be alert, not alarmed. Let me get to your request now, and I think what we've talked about today is going to frame, or what I've just talked about there will frame this coming discussion on individual stocks. Let me head over to here, and I'm going to do the call-ins first. People who can't make it to the live session, and please keep sending me by email is my preferred method there. carl@livemarketanalysis.com. If you have to, you can DM me on Twitter as well. But I'm going to go to Craig, who's asking for HLI, which is Helia. And we've got some problems here. I'm not sure if we did this last week, but there are, you can see the increasing frequency of these black candles. I don't think there's any one of these in isolation is enough to start taking off the table. But when we start to, in addition to the increased frequency, start to print lower peaks, lower troughs, then I do think we have an issue. Let me just change that. It just has to be a dashed line, doesn't it, at the start there, no matter what I do. Solid line now, and we can see here like how many lower peaks and lower troughs do you have to have before you start to get the picture that the demand supply environment is changing, right? And therefore you need to take some action, and that's where we are there. So, if you didn't do it on the first lower peak and lower trough, which is here, and for me, just so you can get your eye in as to where I might do something, I think there is your first minus 1/3. And then you once you've got that out, you've done that for a reason. I think you need to be quite proactive. And I think this candle here, let me just move the blue line over to where I'm talking. So this is the candle that annoys me. Certainly this candle here is disturbing, but it's a little bit of a lower shadow. Hasn't taken out the new trough low here. In fact, that one does. Let's go minus 1/3 here, which then makes this one the point of no return. I reckon I'm minus 1/3 after this point, and I think you need your head read if you haven't gone another 1/3 if you had the ability to after that point. And then I think any of these, and here also, is just screaming at you now to not have a full risk position. And I can't, I can't help you if you can't see it from there. And this is your species ending event right here. So for your reference, when you see this, all right, the uptrend is dead. That's it. Species ending event. And look, I can give you more if you like, but I'm going to be a broken record here, and I suspect Craig, I don't know why Craig's asking me about this one, because if Craig's following the rules, Craig should have been out of this a long time ago. I suspect Craig might still be in it, and Craig, I'm still writing minus 1/3 here. So you might want to read between the lines on that one. Let's go to Max's DDR, and this is super interesting. Now, this is one I personally would have been very happy to be long. On this day here, and even on this day here, it's so strong, I'm not even troubled by that. Even on this day here, I'm not troubled by it. On this day here, I'm just annoyed. So what happened here is David Dicker, I'm pretty sure is the gentleman's name, who's the founder of the company, hence the name Dicker Data, sold again. He's been progressively selling out. He might not be the company's largest shareholder anymore, but he certainly was for a long period of time. And every now and then, and generally the now corresponds to the stock price rocketing. Then the price plummets after he announces his big parcel of shares that he sold. And that's what we're left with. So if you got tagged by this one, don't feel bad. I know you feel bad because you've probably lost a bit of money. It's frustrating. I know you're giving back a great deal of profit, more than likely. I know how frustrating that is. But at the end of the day, there was nothing in the demand-supply environment which saw that coming. It is something out of left field, and therefore you can't see the future, so you couldn't have predicted it, and you shouldn't feel bad about it. But you do then need to be active, you need to be proactive and have a plan on what to do. And if we consider the gap here, okay, so if we consider this gap, and this is still a very bearish candle. I mean, if you actually put that candle into it, or you want to blend these two candles together, whichever way you want to do it, there's a big black candle there. And for me, therefore you are required, and this is what I would do, you of course can do whatever you want to do, required to go minus 1/3 flat out. And see, this is where it starts to compound. Because we've closed beneath all of this demand, like where did that demand go? I know there's this bad event. It's not that bad. This guy's got to sell his shares. He can't hold on to them forever because he's not going to live forever, right? So he's going to sell them, and when else, if you had them, when would you want to sell them, right? When the share price has gone up. So, we can't begrudge him that. We don't have to be, overjoyed it's occurred, but at the end of the day, we all know this, and the whole investment community knows this. They know it's not necessarily a bad thing for Dicker. It doesn't mean the company's bad. It just means this guy wants to get out. But knowing that, where was the demand? Why were they not more active defending this level where they were buying before? And whilst this trend ribbon has done its very best to hold Max, and in fact, yesterday's candle was fine. I think we've got some problems with today's candle. I know everything was down today, but you've still got to call a spade a spade. So I think you would have to go a second minus 130 because it didn't really hold the well-defined demand level there. So that means at most you've got 1/3 left at this point here. You've still got 1/3, and then I think today's candle is a very clear sign that you are no longer having that third. So just understand, let me say this is, let me just put the word left on here because I don't want people to think that I'm indicating that candle means we're buying a third. That would be an extremely aggressive setup. It does fall in the category of aggressive setup because it is holding not light green, the dark green trend ribbon, the long-term trend ribbon there. And therefore you could classify that as an aggressive setup. Not for me though, I'm looking for other stuff, better stuff. But 1/3 left, and then that 1/3 goes today. But Max, you are in control of your destiny and your portfolio, and you need to do whatever you think is best. That's just what I would do. Domino's Pizza for Dan. This is certainly qualifying here as an aggressive setup, and the point where it becomes an aggressive setup is right on this candle here. Okay, I think you see that candle, and I think you can go. And I think it's also strengthened, or that the aggressive signal is strengthened by the fact that you've had, you've actually had really substantial supply removal on that day. And then that day, there's actually so little supply left in the system that demand, the motivated demand, is actually having a bigger impact on price. This day here is still good. I could add a third on that day. Not on this day with its upper shadow, maybe there. I think you might actually have worked yourself into a full risk position, but it is an aggressive, still aggressive. And when I say these are not 1/3, if I said 1/3, I misspoke, because we know aggressive setups don't qualify for 1/3, and we've talked about halving that even, or doing even less again. So if And I'm just using this as a case study because every chance we get, we want to have these case studies where you can, I guess, get my thinking so that if you see this pattern again, and that's all this, we don't care what company it happens on. We're just looking for patterns here. If you see these patterns, then you know what you could do. So I think you're kind of sort of treating it this way. And when you think about it now, all we've got is a third and a half, isn't it? All we've got ourselves into at this stage is a third and a half because of the aggressive nature of the setup. And today's candle, maybe you're ditching one of those, okay? Or maybe you're selling half. And I know it's a bit you're a bit tetchy there, but it is a function of the setup. Let me just put as a minimum. Let me go minus 1/6, but I think you could probably do a third there. I'm going to stick with a sixth because it could have been a lot worse, that candle, but we may see that candle tomorrow. Precautionary measure there. So really now you're just trying to get yourself out at worst at break even. That's all. And if you take 10 aggressive trades and 5 of them break even, 3 of them lose and 2 of them are massive winners, then that's actually okay too, right? I think you're just managing a little bit of risk there on Domino's. I've done crypto, I've done oil, I've done all of our ASX coin requests. I'm going to do the rest of the ASX ones, and then I promise I'll come back to Craig, James and Dan, who want to do US stocks as well. So let me head over here and just check your messages, make sure I haven't missed anything. I'm still broadcasting on the right screen. Donis is asking for a few USA stocks there. I'll get to those in a second. Donis Collins asking for Kogan, which had a very good day today in what was an extremely ugly day everywhere else. And they did, the only announcement that you see on this, because I have to do this interesting moves section in the evening update, which is tedious, let me assure you. And you know what I write most of the time is rise is consistent with prevailing long-term, short-term and long-term uptrend, or fall is consistent with prevailing, because that's all, forget the news, that's what actually happened. I can just imagine the long suffering market index readers of the evening wrap who have read it for many years looking at that and just going, what is this guy talking about? Supply and demand. Now, it had a great day, and that's what I was talking about. It issued its daily buyback notice. So what occurs with when a company buys back shares, they engage the services of a broker at Goldman Sachs or UBS or whoever they normally do their broking with, and they'll say, look, we've got 100 million shares to buy, go off and bloody well buy them. And that's part of demand, ladies and gentlemen. So when you see them announce those share buybacks, don't just ignore those. They matter because they do form this latent demand just ebbing away in the system. And if there's not a lot else going on, and look at the volume today, and that's the sign that there wasn't a lot else going on. There's just not a lot of sort of fund managers with really active or active fund managers with active positions in Kogan. And in the absence of that, the buyback just does its thing. And up she goes. Look, in addition to that, this one's had some very good news in its half-yearly report. I don't care what the news is, but it was obviously good news. And we know when we see big white candles, that's our signal to get involved, especially when they close on the high like that. And I know many people would have said, oh, that's got up too much. You can't buy that. Maybe they might appear on a particular show that happens at lunchtime. But you know what I say? I say, well, that's a picture of excess demand, and you should be involved. I think this is magic. So very, very happy to stay with this, Colin, if you've got it. I'd add risk to that, to be honest. Maybe you might be edging down to a smaller risk addition here because you're a ways away from the light green zone. But otherwise, I can't fault this at all. I don't know what's going to happen tomorrow. Tomorrow we could get this candle, and it could be all over. But what I can see looks very, very good indeed. Let's have a look at PAA. And this is a nice chart here. And what do we say here? Plus 160 had the big species ending candle. Maybe you got out on that day. Could you add plus 160 here? Look, I think if you knew the story and you're really comfortable with it, and you're sort of using your technicals as a confirmation tool to help you sort of find a way into that story, yeah, look, I can see it. I can see why you might add some risk to this today. I would have liked a much higher close though, but I'm also going to give it the benefit of the doubt because the rest of the market was so lousy. We're seeing volume push up a little bit, which means we've removed a bit of the supply that's so obviously in the system. The big problem I have with this, of course, is that there is going to be an almighty whack of supply from the unfortunate souls who got stuck in around 50 cents, and all they're looking at now is a big loss, and they want to diminish that loss, and every cent we get closer to 50 is part of that diminishment. Yeah, look, I think there are going to be easier ways to make money than this, but again, if this is a stock you really have a particular affinity to with, and then I think today's signal is as I said, a path into this one, into adding some risk. I just want to do one thing. So that one was for Robert, I should say. That one was for you, Robert. I've lost my place here, but I'm going to find it again. From Amber, can you explain what's going on with the Bitcoin chart? Reference to my post on Twitter, on X. Amber, I'm not sure if you caught the introduction, but I said there's nothing. You know, I keep asking this question. I've asked it multiple times since Bitcoin was about 30,000 US. What's wrong with this chart? And I want people to tell me, look, there's nothing wrong with this chart. And it's funny because there's lots of tweets back. Oh, it's overbought. it's overextended. I got that today. So I'm just for shits and giggles, let me show you one more leg up. That's it. Oh, Black Swan told me there was one more leg up just after the last leg up. So I'm not sure if that's very accurate. And I want to talk about, for example, where is it? Oh, and I replied. It's going to be in the check marks. I do want to. There you go. Okay, so it doesn't matter who they are. You know, I mean, it's just the example of what was said. All I see is overextension, overbought, and due for a correction. You know, shrugging shoulders. This person never likes to buy at all-time highs, so that's fine. But what I said, look, the way I see overbought is just excess demand. All-time highs means there's a supply vacuum. The only way you can print an all-time high is if nobody wants to sell, and the demand must bid up the price to entice that supply out. That is a supply vacuum. As for due for a correction, no, that's assuming the future, and I don't know that. The future is unknown, so I don't worry about it. And, you know, you need to get to that point. If you can get to that point, you will be a good trader. I don't know the future, so I don't worry about it. What's going to happen is going to happen. I just need to make the best decisions I can and follow my trading plan. I just tried to trade with as many checks as possible, all right? And the checks are here. Amber, hopefully that answers your question about these mystic Bitcoin posts. There's nothing, in my opinion, there's nothing wrong with the Bitcoin chart, and therefore, without going on Twitter and saying, hey, everybody, buy Bitcoin because I don't want to be that person, I'm kind of saying there's nothing wrong with it. Why wouldn't you own it? Let us go to Michael, who's asking about PRN, which was trying to have a bit of a rally, wasn't it? We might have even said on this candle here, and I can assure you, I don't remember what I say from one week to the next, but I think I said maybe you're an aggressive setup here. Maybe that's what I said. Confirmation of it here, that still looks pretty good. But I'm guessing by the sheer number, Michael, of red arrows pointing down, I'm pretty sure I maintain the view that the long-term downtrend ribbon was probably going to be a bit of an issue. In fact, I might have used the term major zone of supply, a major ZOS. Okay, and it wasn't just the long-term trend ribbon, obviously that's important, but it's coincidence with the major ZOS. And the major ZOS exists because it was a major ZOD, major zone of demand. And I went through this long explanation that people are very sad down here to say, please God, let me out. And where do they want to get out? They want to get out break even. And look at today's response from the market. There's not much I like about that chart. Let us go to MTS, and let's find a chart I do like. I don't mind this chart, actually. A nice white candle today in, a sea of black. So that's impressive. I've obviously looked at it in the past because I've drawn another major ZOS. Okay, let me label it for you as such, a major ZOS, zone of supply. But I don't think we're that afraid of it now. Actually, I think we've gotten rid of most of that supply, and therefore maybe we can go a little bit higher. Where could we get to? Well, where's the next major ZOS? I think if we think about something like that shadow there, maybe that one there. Look, I'm going to put this in the category of, look, if you've had it forever, and no matter what I say, you're not going to sell it, right? Then you should feel a little bit more, a little bit encouraged or vindicated by your staunch belligerence to continue to hold on no matter what. So if you have it, you can hold it. Would I buy this? No. I get there's some good stuff going on, but it's so sketchy, it's so overlappy, it's terrible price action. Last week we definitely talked about what ugly, choppy price action is, and this is very much showing you that. So it's not something I would buy with my money, but hey, if you want to continue to be staunchly belligerent, then by all means, you'll probably be moderately pleasantly surprised. Surprised. APX, and this is a very interesting one. Somebody asked me about this during the week, and I think I tweeted back quite literally aggressive setup. The words aggressive setup were in my response. That there is an amazing candle for an aggressive setup, but this is the one here. I think this is the key, and then backed up by good volume on the next day. So that's where I think you can go for an aggressive setup. I'm just telling you this because I want you to tune your eye. I've tuned your eye into all the other setups. And again, you wouldn't have done more than plus 116 on that. And don't look at this and go, oh shit, Carl, there's nothing I can do about it now, mate. There will be more. Don't worry, there will be other APXs. They're making them every day. And then this is also, that is just a wow, clear-cut signal. And today's not that bad either. So yeah, that's not bad. But see, the problem with that one is that we're just getting too close to the long-term trend ribbon. And the long-term trend ribbon, the leopard doesn't change its spots. In this case, the long-term trend ribbon doesn't change its nature, and its nature is to provide dynamic supply. So you can see, so that first one there, the reward to risk is still very good because we've got a long way to go. That one, maybe you're going to take it on the strength of the volume of the candle. It's exemplary. Like today's very good as well. So it's up to you. It's an aggressive setup. You know what you're getting into. It's eyes wide open, and hopefully you're already on it though, at least from here. But yeah, look, I don't mind it. And again, if we rewind back to the Think Markets days, I never would have told you that because it didn't have enough stuff. But you are part of the special group, of course, that we come together, we chat about these things, and I trust you to do the right thing with your money management. Because it's not about the setup, it's about the money management. You can do whatever you want as long as you get the money management part of it right. Let's keep going with COE, which is actually a really nice chart today, and it keeps coming up in the in that evening update in the interesting moves section. I like that chart. I think that looks very good. I could happily have some risk on that. Price action is sketchy, I know, and you go into these things eyes wide open. You would apportion your risk appropriately, but this is a nice turnaround play. This is not an aggressive setup anymore. This has definitely moved into that phase of turnaround because, yes, the long-term trend is well established, but that we are above that long-term downtrend ribbon. The downtrend ribbon has transitioned to orange, and it's now clearly acting as an area of dynamic support, not resistance. So that one I do like. I can happily go plus 1/3 because it's a turnaround play now. So hopefully you can see the consistency in my messaging there. Thank you for those. Brett, Amber asking to look at gold. Again, I know these come at the start, and I know at the start I did the big whip around the grounds. Amber, put in another response down below if you want me to look at gold again. But I did say, look, it looks very strong. I'm not a gold bug, but I can't see anything terrible in the chart. But having said that, Aussie gold stocks don't necessarily, and let me show you, don't necessarily follow the gold price. Okay. They are stocks, okay? If you think gold's going up, the best thing you do, the most sensible thing you do, I should say, is to buy gold. Let me go to Wayne, who wants to look at nickel. and I did look at nickel today in another article, which was talking about Morgan Stanley's views on the nickel market. Morgan Stanley say that they do think that the price has troughed, and they cited their research on what's going on in Indonesia. There's been some delays in certain permits being awarded, but they would probably come through the system. What were some of the other reasons for it having troughed? A little bit more of battery demand, saying batteries were using... No, that was for lithium. Batteries were using they're using less nickel and more lithium, I should say. And that was a reason also for less diminished nickel demand. Go read the article. Hey, they're all fundamentals and I don't care. Let me go back to the chart here and say that we do have a little bit of a rally coming on. There's the line chart. It's not enough for me to get excited about. It looks very much like the Appen chart. Who would have thought that Appen was actually a nickel stock? Not the case. But we are in the realms of the long-term downtrend ribbon, and therefore, let's see what the price action is here. Hey, if it keeps printing high peaks and high troughs, it's not worried about it. If it starts to print lower peaks and lower troughs, then we're still very much in this sort of a scenario. But hey, this is encouraging. We don't have volume here, so I'm trading a little bit blind on that one. Let us go to the US stocks for Jason. And Jason, I'll get to yours not too long. A2 Milk coming up for Haraju, if I'm not mistaken. H, I'm pretty sure H stands for Haraju. And Haraju wants A2 Milk, and we're going to put our... Actually, we're going to go here where I can draw. A2 Milk. It's one that was doing very, very well. What do we say in here? We drew some arrows. Not sure what we drew. I reckon I would have probably taken a third off the table there on that day before the big pop-up. Would have been bittersweet. Looks fine since then. Even today, it looks fine. If I had a full risk position on this, I would maintain it. I can't see any reason to manage my risk at this stage. I'd be more concerned if we were to close beneath, say, that trough there, around about 560. But until then, and in the absence of lower peaks and lower troughs and nasty big black candles coming in on a lower peak, there's really nothing you need to do here but maintain a FRP, which, as we all know, stands for full risk position. Let me do the next one, which is WZR, which is an interesting little blip up today. Look, it's a tricky one. It just doesn't look like it trades very much. And again, you've got very overlapping, blocky candles. Look, I can see why you would look at it. It certainly resembles a turnaround play or an aggressive setup. I can see the white candles. I can see a bit of volume towards the end there. I get it. Look, I don't mind. Like I said, hey, you could pretty much do anything as long as you get the money management part of it right. So I could add some risk to this. Again, if I had this affinity with the story, I knew the story, there's something I really loved about it. Otherwise, I'm probably going to keep looking for something with better price action overall. But Haraju, I can, if you position size this appropriately, I can see why you would add some risk to it, but not for me personally. Let us keep going. We've got Rapalm with Pilbara. I always love looking at this chart, as you know. Looking at that short covering rally, didn't it? Pushed up through 440. If you don't read charts, I guess you probably wouldn't have been concerned about these 2 days. In fact, I'm not concerned about the first day, but the second day is a bit concerning. But a bit concerning, not a deal breaker. This gap here is an issue, and that's where on that day, if you blend these 2 candles together, you are definitely getting a minus 1/3 here. That is clear and I think quite obvious. This is a very strong day here. So this one here, it's not a plus 1/3, no, but it's a very strong day because it's showing demand at the long-term trend ribbon, which was so clearly an area of dynamic supply up to this point, now acting as an area of dynamic demand. The short-term trend ribbon is up and also acting as demand. These 2 candles are very disturbing, and I think on that second one, that's enough for me, given the broader context, to maybe go a minus 1/3 again. But I certainly think you're still plus 1/3, and that last third will probably come out beneath here. So let me go close below minus 1/3. Now, if you haven't done any of those things, then what do you do? I personally wouldn't be comfortable running a full risk position on this, given the chart I can see. And part of the reason, of course, is those candles, the severity of that decline, but also the fact that we are once again printing lower peaks, lower troughs. And if we do close beneath this, I've just gushed about the significance of that point of demand. If we close beneath that demand zone, then where is the demand? It's gone, and that concerns me. So if you didn't have it, personally, right now I couldn't run a full risk position, and that kind of implies doing something about that. But I couldn't be long beneath that trough there. Okay, it's not the greatest of charts anyway. At the end of the day, even in here, there's still a lot of indecision. That's probably the best candle out of the bunch for a long time, and then the three you printed here weren't all that convincing. I just think it's just such a it's overly followed. What's the right word? It's people make too much of Pilbara Minerals for the chart that it is. Look at this rubbish through here. I mean, just look how hard it was. Even it was going down, it's bloody hard, and it's bloody hard through here as well. It's not the cleanest of price action charts. Let me go to SYR for Palmer. We're looking at an aggressive setup. Look, maybe it's kind of. That's Syrah. Yeah, we're going. Yes, I'm not saying owner, Syrah. It's getting closer to a turnaround play than an aggressive setup. I think for an aggressive setup, I think the candles you want to think about kind of look like that. Ordinarily, I'd say look like that, but that black candle probably nullifies this one. That one's important because we've closed towards the top of the candle. So any of those are sort of aggressive setups, maybe even there, maybe even there. If you'd taken any risk on this one on that basis, I think you can hold it. I mean, today's lack of volatility, I think tells you that it's not too worried about what's going on in the broader market. Wasn't a great candle though. But probably fine. If it starts to close beneath, say, that demand point, and it is an important demand point, that low there is 64 cents, close beneath that, I think you're taking some risk off the table. In fact, you're probably just saying this one's done its dash for the time being, because there is a high likelihood still that this long-term trend ribbon does assert its influence on the market. Okay, but if you've got it, there's enough in there on the basis of this aggressive setup to currently maintain your full risk position that you have. Let me go to, and stop typing in new ones, I'm just going to check what the last one is so I can see Peter with SFX, WIA and PWN. You're the last one we're going to do tonight, and then I'll head back up the list and to the US stocks. We are going to head to, these are all US stocks, 4DX. Which looks pretty good here, doesn't it? I mean, today's candle's not great, but there were plenty of not great candles around. If I had this, I would continue to run with a full risk position. I don't think it ever would have been more than a quite speculative trade. So then adjusting your risk accordingly, but having a go if you want to. I'm guessing that's what I might have said in the past, given the price action. And that candle there that the blue line is on is the key candle. That's the one that would cause you to add risk. And if you added risk on that day, then I can't see any reason why you would not continue to maintain that risk. Today's candle's disappointing, but it's not enough to push me out of that position. So I think just FRP and status quo for the time being on that, but you know what to do if you see the black candles or the upper shadows of sufficient magnitude for you to manage your risk on that one. Let's go to GWA from Adonis. Which is, I'm going to go ditto, but better, because this is an exemplary chart. I mean, this just looks fantastic. I can't fault. It's a bit like Kogan, isn't it? There's a couple of little black candles at the end there, but they're just so meek and mild and insignificant at this stage. And today was a terrible day, and really there's very little selling on that. What does it tell you? Something's gone up so much, and on a really bad day in the market, people couldn't be bothered selling, or they just didn't remember to sell, or they're just not motivated to do so. So I'm happy to stay the course on that full risk position. Would I add risk on it based upon today's candle? No, I wouldn't. But I'm happy to stay the course if you've got it. Adonis. Let us go to ABB, which looks pretty good. I'm getting a little bit concerned, by some of its what's the right word? It's stubbornness or its inability to push higher. Today's candle creates another lower peak. So if you put the price action on, let's go here and show you what that looks like. So I reckon those two are the same low, and then we go in here, here, and here. And you can see we've got this sort of this compressing pattern here. It's a little bit of indecision. You know, some people would call that a pennant, wouldn't they? And say, oh, well, whichever way it breaks out of the pennant, that's the way it's going to go. I just say, look, supply is building. You know, lower peak supply is building. Demand is fairly steady, though, isn't it? It's fairly robust because the troughs are rising. But at the end of the day, if we do happen to close beneath these troughs, and that is an area of demand, an area of that's been, you know, reliable in exhibiting excess demand. If we close beneath there, then you do have to question where the demand is. So look, I'm going to go close less than, that's a -1/3. Is there reason to be out more than a third at this stage? Let me change the colour of that. That candle maybe just saves itself with the lower shadow. This candle here. Yeah, I mean, you would have been very pedantic to have managed your risk prior to today. But when I see the combination, I think it's kind of today's candle in the combination with that one. Let me just draw some arrows on them. So just I'm kind of putting it together and considering it today. So not prior to today, but just these candles together. It's just starting to grate on me. And you know, you've probably had a very good run. And given what we spoke about on the index, and this is where it kind of fits together. And hope for this is your takeaway point. I'd like to have that one takeaway point for each week is if you're kind of having this debate, oh, don't I? Well, that big black candle on the index should be enough to convince you. Like, I will. I'm going to take the precaution. I'm going to knock out a third on the open tomorrow. Okay, and I've still got 2/3. I know where my next third is going as well. And I want to make a plan for my third after that, and I reckon if it closes beneath the short-term uptrend ribbon, there's no reason for me to be holding a full risk position here, or holding any risk position at that stage. So just having that roadmap in mind, and then using what's happened on the index to kind of you know, really motivate you to take some risk off the table. You know, if we had this huge white candle on the index, we wouldn't be having that discussion on that last candle, would we? And same here. I think this is a very similar, very similar sort of train of thought that's required. And if it wasn't for the magnitude of excess supply in the broader index, then you probably wouldn't be too concerned about that last one. But I think there's enough there for me to just go straight -1/3. And then we've got some other levels here which are going to come into play. And I wouldn't want to see it close beneath those lows there, those shadow lows. And then the next level, I'm going to say probably under here, or potentially you could be as conservative as under here. But it really is up to you because you can do anything you want. And it just comes down to where would you no longer feel comfortable holding, because big demand levels have been taken out. You know, there was demand in the system really from this shadow low, but that candle there's the key one as well. If we get beneath those lows, what does it tell you about whether that demand is still in the system? So you know, just having a roadmap of how you're going to tackle these. Actually, we're going to end up with 4 -3s here potentially. And it might be frustrating. Oh, Carl, that's so annoying. I wish you didn't say that because you know, this is my favourite stock. I've been going. Mate, I'm killing it. I'm killing it on this thing. You know, all good things must come to an end. And you know, they should only end if there's a signal in the demand and supply to instruct you to do so. And I think there is. On that one. Let us go to PNV. I know this because look at this. What a great place to go next. Because there's nothing to worry about on this one. Okay? It didn't respond to the selling in the broader market. Nobody was scared. Nobody's afraid here. So if nobody else is afraid on Polynovo, why should you be afraid? There's nothing to do here. This is FRP every day of the week. I don't know what's going to happen next. Of course, that's for you, Mick. Adonis has got WCM, which is Global Growth Fund. So it's an ETF. It's got a bunch of different stocks in it. I don't know what the constituents are, so I can't comment. For example, I can't say, oh, look, it's got lots of stocks from the Russell 2000 in it, and that therefore we need to take it this way. Look, I'm just going to go on face value and say there probably isn't a whole lot to be worried about based upon what I can see. I would start to manage my risk on a close beneath there because then the price action has changed, and there are 3 black candles in there, but it is a sketchy price action, and it's hard to do. It's not hard. I think it's kind of pointless to do technical analysis on an ETF like this because you kind of need to be doing technical analysis on what the ETF is based upon. In fact, that's actually not what I should be looking at. It was WCM. It's not that one, I'm guessing. But everything I said there was relevant, and we can think about it later, unless it is That's WCMQ, and Adonis has asked for WCM just by itself, and I can't see a WCM here, so I'm happy to concede that I may have made a mistake there, Adonis. Let me try and find. That's it, Wiluna Mining. I'm guessing Adonis, you're asking for an aggressive setup. I don't think it's there yet. I could only imagine that could be the only reason why you're asking me, of all people, about that one. Maybe you need to ask a value investor, but no, I don't think that's enough yet. Because remember, the aggressive setup, we want a big candle. You need to see that candle. It needs to really, slap you around the face and say, hey, look at me, with substantially large volume. Preferably, we've seen it after a long basing pattern. When I might refer you back to APX for this classic sort of aggressive setup. So you had at least the basing pattern, a couple of, just even a high peak and high trough. They don't have to be hugely, high peaks and high troughs, but something in there that's already occurred. And I just don't think we're seeing it here. So it's a no for me on an aggressive setup. It's too early as far as I'm concerned. And whilst today might be the absolute low, and this is the last time you ever get to buy it at this price, I totally concede that it's not something that I'd be looking at. Because the trends are horrific and horrendous, and so is the price action of the candles. Between you and me, Adonis. Let us go. Scratch that WQG. Well, there you go. I should read the next comment, because WQG, we're not okay. Well, you couldn't get to more different charts, Adonis. Thanks for doing that for me. I actually went to 2 wrong charts, Adonis, before getting to this one, which is fantastic. There's nothing to worry about here at all. But I'm guessing it is, again, it's a fund. It's a fund that owns a certain bunch of stocks that are acting in this way. But you still do your normal TA. There's nothing in there that tells me I shouldn't have a full risk position. Okay, we got there in the end. PRU from Brett. PRU, how are we going on time? Okay, we need to speed this up. PRU, the comment is, it's trending up. It is trending up. I can see a short-term uptrend is in place. I like very much that it's burst above the long-term trend ribbon. We're going to get a pullback. Today's candle tells me there's a little bit of a pullback, and the next trough is going to be key. So I see that sort of trough form above the long-term trend ribbon. Now, I will say that it's stopped acting as dynamic supply and starting to act as dynamic demand. And that would be very bullish. And if I did see the right candles in here, Brett, so some nice white candles, lower shadows, wherever that occurs, it could be tomorrow for all I know, I could happily add some risk on this. Preferably, actually, it does it just above $2 would be nice, sort of just holding on to $2. A shadow that kind of dips into 195 and then closes with a little white body up at 2. That's the sort of one. I think you know what I'm talking about there. I could add some risk on it there because I really like this. I like the gap, and I like the run, and I like this big white candle. We've had a couple of sketchy days here in the market, so that's fine, well, for gold stocks anyway. And it's that if it sort of hovers around 2, it's largely holding this old point of supply. So there's not what I wanted to do. Let me go back here and draw that. So there's your old point of supply. So we're kind of holding there or thereabouts. And yes, this would be then one of the better gold setups out there for a turnaround play. Okay, looks interesting. Don't need to do anything with it today based upon that last candle, but keep it on your watch list, I suggest, if you're a gold bug. ANG looks great, says Adonis. It does look great. Austin Engineering, so happy holder here if you've got it. If you don't have it, I can't see why you couldn't add some risk if you wanted to add some risk to anything at the moment. It looks fine to me. Maybe 50 cents is a little bit close. A little bit of a shadow there on the today's candle, but still a very good candle within the context of the trend. A little bit of volume coming through. Look, The candles aren't great in that they are sketchy, they're blocky. It is an extremely liquid company. It's very clear to me that that's the case. But again, if you had it, you could hold it. If you don't, and you're really focused on this one and you love this one, then I could add some risk. Wouldn't be getting my personal money though, just given the circumstances of the setup and the broader market. Okay, SFX, the last three for Australia, then we're heading back up the list. I think that's okay. Yeah, look, it's a bit more of an aggressive setup. It's obviously pulled back to the long-term trend ribbon. It seems to be holding it, a couple of white candles, bit of volume there. I could see if you were that way inclined, you knew the story, you had an affinity with the story, and you wanted to have a go, and you're looking to time your entry into that story, then I think you could add some risk here. I don't think you need to go in big here. I think get a toe in, and then as we continue to print white candles, we make higher peaks and higher troughs, you could add some more risk. But again, we keep coming back to these charts in Australia. It's very frustrating where we're just looking at these candles that are almost nonsensical and price action, which is equally thus. We are at the minor end of nothingness here. WIA, and we're going to continue on in this vein here, Peter. And I'm going to go ditto. If you knew the story and you're looking for a leg in and timing thereof, I think it's fine. Even after today's shadow, there's still plenty going on. You might want to wait for another white candle or a lower shadow before you did it. That's probably more sensible. But otherwise, it has all the hallmarks of a great turnaround play, but also has the hallmarks of a really crappy, dysfunctional, illiquid stock as well. Let's go to PDN, which is not illiquid and dysfunctional and crappy. It looks half decent. Obviously, it's having some issues here with this severe correction. The big gap here was your key. So we talked about being extremely aggressive on taking any signs of supply as a signal to manage some risk here. And I think that certainly, if not on that candle, then the combination of those two is a minus third. Let me get rid of some of these because I do want to do a little bit of a case study here. So let's go minus 1/3 here, minus 1/3 here is I think where you would go the next one, and then minus 1/3 here, and you'd be very happy with yourself because you'd be completely out of Paladin by that point. What we'd be doing now, I can't see any signals to get back into it, honestly. I mean, this is okay, but you want to see higher, some better price action and some white candles on that pullback, like I talked about the other one, into $2, whatever that one was. And we just haven't seen it. Today's candle's half decent. It's restoring my faith in the possibility that this area can hold, and we're in this sort of a pattern, okay? And I think I would wait for a close very close to here. So it doesn't have to close above there, but certainly with a full white candle closing very near that zone. If it closes above that zone, it's a bonus. Before I was to add risk on this, on the basis that we will now look to tackle that zone there again, okay? So one of the better looking uranium stocks out there, the best one, if you go and look at my article today was Lotus. And probably I've said enough on this because I think I said it all in that article today. So go ref the article. But a happy holder at this stage, I'd be concerned on a close beneath here. I'd be managing the risk through there if I had any at this stage. And certainly through here, we've got major issues. But the key will be a close, and I'll give you a number there, around or better than 127. That's the key level. I'm pretty sure I said that today in the article. All right, we're going to head back up the list. We're heading over to the USA now. So hang on to your horses there. We're going to kick off with VVV, which is the short sale volume. Not sure what that's about. That says Valvoline. What was that? Because I had indices selected. Okay, let's go to stocks, and then it's going to make more sense. Valvoline, know what I mean? It looks great. Can't fault it. Would I buy it? Probably not based upon the last candle, but the next white candle I could. The next nice lower shadow I could. It's a little bit of a ways away from the light green zone. Maybe I might do a little bit less than a third for that reason, but otherwise I can't fault it. If I had it, I'd be holding it. There's nothing so sinister in that chart to suggest to me that I shouldn't be holding a full risk position at this stage. And Nicholas correctly says it's holding up well so far. But Nicola, are you looking to continue to add risk tonight in the US? That's the question I've got for you. Let us head up the list, making sure I don't miss any of your requests. And we're going to go to NVIDIA, which is a good one because I won't forget to do these today. Craig also wants NVIDIA. Craig wants SNOW though, and this is one I should have done for Craig a couple of weeks ago. Apologies, Craig. But I do the Aussie stocks first. I do the US ones, and I forget to go back to the list of offlines. And it's tanked. So this big gap down, I'm guessing, is earnings. It's done that since you've asked me to do it, so apologies. But I don't think I would have got you out of it, to be honest. I don't think there was anything so sinister since you actually requested it to warrant getting out until that event occurred, where we actually now in lower peaks lower troughs, we're beneath this, and that's a compulsory on the basis of the gap, understanding what that gap means, compulsory minus 1/3. The next candle where it tried to rally and failed would be another minus 1/3, and that candle there is the final 1/3, and we are out, done and dusted by that candle there, so we wouldn't care about what's happening now. And it's unfortunate, and there's just nothing we can do. When our stocks miss earnings in America, they're going to move the wrong way. So hopefully you managed to extricate yourself from that, or if you were thinking of buying it, hopefully you didn't buy it. So the one Craig wants now is NVDA, of course, NVIDIA, brain snap there, but it's also being requested by Rapam, and I need to keep that up. Okay, well there you go. What do we do with that? I think you know exactly what to do with that. The only question now is it minus 1/3 or is it minus 2/3 or is it minus the whole lot? Are we close enough to 1,000? Is there a round number in play? What did I say? Within 5%, didn't I? I said within 5%. And well, there you go. 100%. Okay, that's it. We're out. You're out in NVIDIA. You heard it first here. Do not pass go. Do not collect $200. In fact, collect your $200 or whatever you've got on it. Carla said, no, that's it. Species ending event on NVIDIA. Hey, I don't think it's a species ending event forever and a day, but I think you don't want to have risk on this right now. That's all. Okay. Happy to be proven wrong on it. If you don't like that, keep a 1/6 or something. Okay. There's 100% we know there's enough for minus 1/3. The round number makes it 2/3. The only question is whether you're keeping that last third. Okay. I remember that I said I really wanted to pick the top. I wanted to be online broadcasting to pick the top of NVIDIA, because I don't know if you remember, but I actually called it a buy. I reckon back here, somewhere back here on the trade on Ausbiz. I ran it as like my best chart of 2022 or something. So it was around about 200. So to call that at 200 as a buy and then to call it at 1,000 as a sell, I think that's a nice little swing there. But I'm calling it. The only question is whether you're keeping that last third. James wants AVGO. There's your scoop today. And I can 100% minus 1/3. The only question is whether you're going 2/3 or 3/3, but 100% a third. Lower peak. This is a trough here because we've got lower highs, lower lows, and then we've got high highs. So it's 2/3. It's 2/3 here. And I think you can hold on to a third, but I'd say sort of beneath, say 1270, a close beneath 1273, you're knocking that third out as well. So I'll leave that up to you. Big black candles, look at the volume as well. Supplies into the market. Yes, there was demand soaking it up, but that demand is pre-programmed, isn't it, to continue to buy based upon the trend. And they don't always see it coming. There was plenty of supply. Yes, there was plenty of demand, but there's plenty of supply and they were motivated as well. Okay, first 3 US stocks are extremely concerning. Let's go to ARQT. This one's fine. This one's fine. I mean, that black candle, there's not enough to warrant me doing anything with it. Price action could be better because this move through here, obviously the pullback, we'd like it to terminate. This trough we want to terminate above the second from last peak. It's not. So we're losing some momentum in the price action. But that candle on Friday, given how bad Friday was, no, there's no reason not to run a full risk position here. I think that would change on a close beneath 10. I definitely think you're managing a risk there, and I'd say you'd struggle to still be in it below, say, 920, and yeah, you can't find a reason to be in it below 850. Otherwise, no, I think it's fine. Would I add some risk to this one? I just think the broader context of the market, I don't really feel like adding any risk today. COIN, Coinbase, obviously crypto's doing well. This one's doing well. I know our predisposition to look at Bitcoin and Ethereum and kick ourselves for not listening to Carl and buying the hell out of them and then saying, well, I'm a stock trader, I'm not a crypto trader, and this is the next best thing. I think that's faulty logic. Much like I said, if you think gold's going up, buy gold. If you think Bitcoin and Ethereum are going up, buy Bitcoin and Ethereum or another crypto that has a similar chart. I'm not sure buying Coinbase is the best way to do it. Okay, I think that's fine. If I had it 100%, I would hold it. So that's the first part of that answer is somebody who doesn't have it. For somebody who does have it, I'm speaking to you now. That I'm not fussed by that shadow. It's not ideal, but it's not into any round number. It's not into any major historical point of supply. I'm guessing. Let me check for you. No, not really. So it's not fussing me too much. I could continue to run a full risk position at this stage, based upon what I can see there. I've done all of the offline USs. I'm not going to miss anyone this week. Because often when I miss one, I then have to go create a chart and send it to that person individually, so that's a pain. I won't do that this week. MOD, going to get them all. Modine Manufacturing Company, where are we? Good or bad? We're bad. I think there's enough to go minus 1/3 there. Do I think there's enough to go minus 2/3? Probably not. Light green zones coming into play. We haven't broken any key troughs at this stage. This area should hold though. A bit of a round number, the second from last peak. We should see the demand come through here. And if we don't see it, that would warrant the second third. And certainly if we close beneath, say, a 75, then that's where the bigger picture roadmap where the final third would go. Obviously, if I didn't have it, I wouldn't be looking to buy it on the basis of the last candle. Let us go to ANF, which is Abercrombie and Fitch. And we've got major issues. I think you know what I'm about to say. Minus 1/3 on this candle. I know you did it. Minus 1/3 on this candle. I know you did that too. You've only got a third left, maybe on a close, or another black candle that closes on the low, obviously, but on a close beneath, say, 113 for that final third. For you, Rupam, I know you're following the rules there. And this one here, the species ending event. So full exit here on this candle. Do not pass go, do not ask any questions. This candle here is the species ending event. So this candle here, which would probably be minus 1/3 in its own right, is irrelevant because you wouldn't have any risk on this position to start off with. Well, not to start off with, but since that big black candle. Let us go to ELMD. Now, these are for Jason. Electromed. Wonderful, wonderful candle. So it looks a bit like those sketchy Aussie candles. Aussie stocks, don't we, with the full blocky sort of candles. But something's going on here, no doubt. The volume, and this is, I think you need to have some risk on this, even in such a terrible overall market. And hey, I shouldn't have said that, because the market's not terrible overall. We've had one big black candle, but you can see the ramifications of that. I probably wouldn't be a third on this, but I'd sneak some risk in on this and just see where it goes. And the trade might last for a day, or it might last for a year. I don't know. I might lose $1 a share or $2 a share, but I might make $20 a share. I don't know, but there's enough in that. There's clearly enough in that in terms of how demand and supply are interacting and how excess demand is manifesting itself to have some risk on that trade. FIP is the next one. FTAI Infrastructure, which is a ditto. This is great. I mean, where the other one's kind of a bit, sketchy and specky, this one looks really solid actually. So I'd go a third on this one, but it is a long ways away from that light green zone. So having said I'd go a third, I'm now having said the second thing, which is it's a ways away from the light green zone. Maybe it's a 6, just because I'm worried about that mean reversion. But I think it's a perfect chart. It is a very, very strong showing of excess demand there. So good pickup on both of those, Jason. Let's go to NMM. And we are trying to balance these thoughts. They're trying to balance these thoughts against what's happening in the broader market. This one is really extended. Doesn't mean I don't think you can do it, but in terms of reward to risk, $50 is not that far away. And when you put where do you have your stop loss? And even if you don't have an active stop loss working in the market, we do have our own price action stop losses. So if we were to close beneath that candle low, the demand that's in the market that created that candle is gone, and that's a concern. So if your stop's there, I guess you can still get into 50 without any problems with reward to risk. Look, again, it's an amazing chart. It's a picture of excess demand, but where do you stop yourself in terms of how far away from the light green zone do you take the trade? And I don't mind this idea of the further you are away from the zone, the smaller you make your risk. Okay, but you're going to get to the point where it's uneconomic because you're paying brokerage, etc. Right? I'll leave that one with you. I could definitely see a path to adding some risk if you were that way inclined. OTIS. But obviously, it's hard for me to make a comment on something that's that far away from the light green zone. This one is relatively close to the light green zone, but it's got a little bit of an issue there with $100. You must say, hey, Carl, 100 is not going to matter. But you know what? You'd be surprised. It probably will. But otherwise, it is a perfect chart. It looks amazing, and I cannot fault it in any way. And on that basis, yeah, I absolutely think you could add some risk. And I think you could add more risk on this one than maybe for the other ones because it is clearly the cleanest price action in terms of the candles, etc. Very interesting. PRG, actually there's one more here for Jason. Filling Perry's boots very well. I'm not sure about this one, a little bit different, isn't it? So I can see that you've got the basing pattern there, but I think this one's at risk of rolling over there. So I'm kind of questioning, Jason, whether I've got the right one now. PRG. Holdings, NYSE, yeah, unless it's Procter & Gamble on the DAX. Which looks okay, but yeah, I'm not sure about it. Compared, the ones you showed me before that are so different. But yeah, you showed me some great ones before that, and that's really it. We've got some Adonis has got his LALRM, so fewer US stocks than usual. Adonis, I wonder if you're in this. I think if you are in it, we've got a couple of shots across the bow here, but again, alert. Not alarmed. A close beneath that trough low there, so around 72.50. I think you are compelled to manage your risk because we'll be in lower peaks and lower troughs. And I'm a little bit concerned by this upper shadow here, confirming this area here as an area of supply, of excess supply. I don't think there's enough in it to go minus 1/3 at this stage. I think you're giving it the benefit of the doubt on the basis of what are still very, very good trends. But another black candle, which confirms this lower peak, I think is enough. If it closes on the low, so you'll know by tomorrow morning, then I think you are going minus 1/3, and then you've got the second third here, and the third. Well, I'll leave that up to you, but probably below the light green trend ribbon. If I didn't have it, I'm not looking to buy it on the basis of that last candle isn't suitable for a buy. Let's go to EXLS. I've got one more after this. Actually, this is the last one, as far as I can tell. And this looks really good too. I love this. I love this price action. Really strong price action. Light green zone acting as dynamic demand. Long-term trend ribbon is turning up and acting as dynamic demand. So all very good. Nice candles through here. I know there's a couple of shadows there, but still very, very good. Friday's candle is excellent. Volume looks fine, and we don't seem to be fearful of the big point of supply there, which is just trying to, well, I can do this. Let's try this. Ooh, there you go. It's a bit wonky, but that's a point of supply. Let me change the colour to red. There you go, good. And we, obviously there is an area there which I do think is important. The only problem I have with it, Adonis, is that if you get through that first point of supply, you've got a bit of an area there that I do think is going to be quite stubborn. And then can you make the reward to risk? And I think if you're going on the basis of this candle here with maybe a stop there, I think you can. But you're going to have to make this quite an aggressive setup in that you have to get in here ahead of the break of that point of supply, because otherwise you won't make the reward to risk work into there. So there's lots of stuff I like about this, but where it potentially falls over is in the tradecraft part. So not so much the setup. The setup's fine, but the tradecraft, which is where do I get in? Where will I want to get out if something doesn't go right? And what's my potential first stop target? And preferably, not preferably, but I really should have at least 1-to-1 reward to risk. Otherwise, why am I taking a trade? If I stand to risk more than I stand to make, then why am I doing this trade? That is me back up to the top of the list. Let me double check there's nothing on the bottom of the list. Adonis give me some updates on entry levels, but I think I answered questions for whether you're in and whether you're not in as well. Adonis probably gave you what you needed there. Let us head back to the PowerPoint presentation And remind everybody that everything we discussed in today's session is general advice. It has not taken into account your personal financial circumstances, objectives, or particular needs. And therefore, before acting upon any of this information, you should consider it carefully or seek the help of an investment professional. Look, trading and investing is risky. Markets go up, markets go down. You could lose money. If you do lose money, you're responsible for that, not me. Apart from that, it has been an absolute pleasure chatting with you this evening. Different vibe to tonight's session, but that is the market, that is trading, there's investing. We're not always going to have beautiful, wonderful uptrends, and that's okay too. We need to be able to understand how to function in this environment. And I think the good news is with the charts we've looked at today, I think we've given ourselves some really good tools and some methods to deal with pretty much anything this market's going to throw at you. So on that note, I will thank everybody for joining me this evening, and of course wish you all the best until we catch up again. Bye-bye for now.